Nick?
Can you hear me now?
I can hear you. Greg, can you hear me?
I can.
All right, let's just see if we can get this thing. There we go. You're looking good, my friend. How's everything on the west side of Winnetka?
You know, the west side is the best side, baby. You know,
Right
I know
on.
you're over there in the high rent. You're over there in the high rent district, but you know, what can I say?
Yeah, I got you.
You know, you're east of the tracks. You know, that's it's all good.
So let's.
You're working from MX North. That's MX North.
Yes, I am. I am from MX North. Bob just put up that he can hear us. That's great. One thing I wanted to kind of talk about, first of all, everybody welcome. I don't know if Matt is going to join us. He is down in Texas visiting customers, visiting lumber on the ground.
Boots on the ground, baby. Boots on the ground.
Boots on the ground is always good. This is the time where Matt's doing what you should do as a seller, going and visiting some people and listing on Materials Exchange at the same time. So
I mean, he's a guy that can walk and chew gum.
He certainly is. He certainly is. So everybody, welcome to This Week in Lumber. Greg Riley, Ashley Buckle, Greg from Sitka USA, Ashley Buckle, Materials Exchange, powered by Mickey Forest Products. So what I wanted to talk about today, Greg, we had a brief conversation, is we'll talk about all the negative news, put a positive spin on it, get all that out of the way, because I think
we had first. Go ahead. Sorry.
We got. So I was going to first of all, went to my first Cubs game last night, and everybody was asking me, "How's lumber?" First of all, going to the first Cubs game is great because they're technically eliminated, but it was a great atmosphere anyway.
You know what? I mean, that was fun. Did they end up winning that game?
2-1. Yeah. So
I saw that they went ahead in bottom of the seventh. That was, that was great. That was great.
It was typical. After I was done talking to the three guys, we stood up and we thought that it was only the fourth inning and the game was over and everybody was walking home. So it was pretty fun. So, but what came up last night is one of the guys I was with was a mortgage guy, and we were talking about rates, right? Remember when you and I were talking about them, and you kind of said something 4 or 5 months ago about, well, wouldn't be surprised if rates went to 7%, and everybody's like, they're not going to 7%.
I hate when I'm right.
They're there.
Yeah,
they're there, and now.
Yeah. So. Yeah. Where do we go now?
So
right.
Yeah, we're there. And of course, every economist in this industry who also said 6 months ago they would never be there. What do you think? What do you think going forward on rates? I saw one article how rates are at 7%, but it's complicated was the title of it. I don't know how complicated.
Yeah, I mean the advertised average 30-year rate. I mean, it's harder than that. I mean it's costing people more than that to get stuff done. And so I guess, I'll just backtrack for a second. Yesterday we got the first really positive news that we've had in months, with new home sales being up 28%, which arguably it's a great number. They were forecast to be unchanged. Year to date, sales are down 14%. So
let's dig into that outlier being up 28%. Why were they up 28% for that time? What's the
they revised the prior month down a little bit, and what I think, Ash, is I think that we've been hearing about the cancellation rates and how high they were. And so I think for the last for the prior months, cancellations were chewing up new sales, right? Because you only they don't, if they count a sale at, a year ago and then it gets canceled in May and then they sell another one, they don't they don't count. You know what I mean? It's a net zero.
That's a great point. So basically, you brought up a point that we're running out of people canceling orders at this point.
Right. So the cancellation rate has fallen. That's great. I mean, there's a high degree. This is the statistic that is the most hot. The revisions are the highest on this, right? It has I was going to say, because the standard deviation plus or minus on this is what is the number? But I don't know. I can't see it right now. But I'll just say this is a number that gets it's highly revised, right?
So with that said, you also brought up something really interesting. Again, this was your idea. Not only that is, home builders are doing what it takes to move homes right now too. They're lowering prices.
Right. So the price. Right. I mean the average price fell. Chase Schiller came out yesterday, and this is what I look at as a positive. Housing prices had gone up so much and they were unsustainable. Having a correction in that is a really positive overall. But Chase Schiller, year over year, house prices are now up only 14.7% from 17 something the prior month. It's the fastest decline since they've been tracking it. So I'm not going to be surprised if
what were they
go
up?
Ahead.
What were they up year to date? Roughly, yeah.
14.7% was the year over year increase in home prices.
Okay. I just threw up the article.
But I'm saying this is the number. So this is the July number. Okay. So, do you think about the lag? But the point is that the prices cooled. It was 14.9% down from 17.4 in June. There's still in July, there was still cities that were still up 25 to 30% from the year prior. Tampa, Miami, and Dallas, we're all up 25 to 30+% in July from the prior year. I am going to bet that over the next several months that these year over year increases will continue to fall at a very, very sharp rate. It's interesting when you look, the stock market right now is back to where it was pre-pandemic. Okay. So basically what happened was we had a 2.5 year round turn from February of 2020. The market had that sharp fall off on COVID, and then we had a 2+ year rally that we've given back in the last 5 months. 6.
Yeah, it's crazy.
So
we're back.
I don't know if home prices, we had back-to-back years of 20% increases. With the lag, I'm going to say no. I think that the home prices are going to be a little stickier, and we're not going to go back that far. But I firmly believe that we're going to see some substantial, further adjustments in home prices between now and the first half of next year.
So that brings up a good point,
which I look at as a big positive. That's a big positive. Affordability was crazy, and so yeah.
Good point. Good point. When rates go up, all you do, if it's really just a monthly payment to some people, you have to adjust the prices down to coincide with what the monthly payment is on some of the rates, right?
I don't know that that's linear, Ash, but certainly the fact that the interest is double what it was a year ago is going to have an impact.
For sure. So this is a hard one. So pending home sales, what's your thought here on pending home sales drop for the third straight month?
Yeah, I mean, I mean, they're kind of continuing the trend. Pending home sales are hang on a second. Pending home sales is because existing home sales are closings, not contract signings. New home sales are contract signings. So, there's a big lag there. They created pending home sales to be, kind of closer to the market in terms of from a timing standpoint. So, I mean, they're just showing the continued trend. Like I said, I think new home sales, when they come out next month, will probably go back to trend and be lower, right?
So Beamer just joined, or he put over a note on the side here. Talk about the hurricane effect on euro. I don't know. He may know more on that than me, or you may. How is the hurricane affecting euro on the ports down there?
Well, I mean, first off, this looks like it's going to be a really tough hurricane for the west coast of Florida. And I mean, I know you and I have friends that are down there, and obviously we want to send out our thoughts and prayers that everybody's safe and got to higher ground. I mean, it looks like that area north of, really from North Naples to South Tampa is going to just get hammered. And, so, what happens after that, we'll see. I mean, the effect on euro right now is, I don't know. I mean, ports in Florida are all closed. Yards in Florida are all closed. Airports in Florida are closed. For the most part, we'll see what happens over the next 24 to 48 hours, and it's not as bad as everybody thinks, and then things will be back to quote unquote back to whatever the normal was. But
I mean, look, it's all paper wrap, so it stays dry. That's why they paper wrap it.
I mean, the Port of Tampa may have a bigger issue with flooding than the East Coast ports are going to get just grazed by it and not be really significant. But wood in Tampa could be imperiled.
Right.
That's for sure.
Gotcha. So before the thing I went through, Googled lumber news stories. So all the news stories are the same. It seems like they come up and they say, "Hey, people should have watched lumber prices. It really was predictive," or lumber prices falls to pre-pandemic levels. And I don't think if you've been watching this show that's any surprise to anybody, right? Lumber prices have dropped by more than 60% this year. So it's headline, it's a big headline, but the fact is they kind of went back, normalized a little bit. The same conversations keep going out, everybody's talking about how things will be curtailed and pulled back and cut back. Yeah, I'll say the same thing. In Western Canada, that's probably going to be a normal thing every now and then when they have less fiber supply and they're buying more stuff down in the South, and mills will open in the South and produce more lumber. So, but I haven't. Well, so it is Wednesday and it is 12:15. So I would expect within the next 3 or 4 hours.
Is it curtailment? Is it curtailment time?
It's curtailment Wednesday, I think. So my guess is that at some point today or the next 24 to 48 hours, somebody will probably come out with something somebody said something. What's that old article about something? But I mean, look at the fact is, we have enough lumber right now to manage the building that we currently have, and which is a good thing, right? And prices are still, if you're in the South, a pretty good return. I don't know enough about. We've got to have Russ on again to find out what's going on with the logs, right? Because eventually that log price is going to roll over again with the prices, correct?
I mean, listen, taxes, log prices, those are all like real lagging. I mean, the most interesting thing I see is that, taxes were higher and log prices were lower when prices were really, really high. And when prices are lower, then, log prices are higher and taxes are lower. Listen, what's the big number that I'm looking at is I keep looking at exchange rate. Listen, the euro is a discount to the dollar right now. When you think that, as recently as 6 months ago, we were like in the 108, 110 range, and I looked the other day, I think it was 96 cents.
Yeah,
That's crazy. But I guess so you're tell me what your question is again, Ash. Where do you want me to talk? Where do you want to go?
I was just talking about. I was talking about curtailments, but how we have enough wood to really to manage everything we currently have. And I think a lot of people were talking about euro as all of a sudden being shut off and not coming here. And maybe that's the case eventually, but right now it seems to still be coming over in a decent supply, right? And you'd be one of the ones that would know first of all if it's not going to.
Well, I mean, initially after the Ukraine, there was an issue about, the mills that get logs from Russia, et cetera, but there was a big lag on that because they didn't want to disrupt all the things that were in the pipeline. And so that really didn't have much of effect at all until pretty much close to July. And obviously during that time, people have made adjustments. Is there less wood coming from Russia? Yes, absolutely. Is there less wood coming from the rest of the rest of Europe? Not yet, but I mean, at some point there will be. But that's partially going to be to match demand.
Right.
I mean, part of what ends up happening. I mean, if we fall in demand, then we're going to need less wood. The joke, when you said, people were asking you about lumber. The last 2 years, we've had more people talk to us. I say, you and I that, aren't in the business about, more people have known about lumber than like for all the years that we've been doing this. And my favorite is there still a shortage of lumber?
Yeah.
And my canned answer is always, there was never any shortage of lumber. Everybody was always able to get as much as they wanted. All they had to do was pay the price.
Right.
I mean, so what happens in a commodity is, there's never a shortage of a commodity because you ration supply with price. There were shortages of other products that don't trade freely, and, things were on quote unquote allocation. And as you and I found out, part of that was self-inflicted in that there were certain people that hoarded some of those other products and had more of it than they actually needed.
Right.
Right.
We saw that from some builders and some other people that called us to move extra product that they had after it rolled over. Right. But they, kind of like I had some extra, probably too much toilet paper in my basement. Right.
Yeah. I mean, you are a bit of a hoarder. Mm-hmm. Yeah.
Survivalist.
Yeah, there you go. But so it's going to be really great to have Matt come back after being in the field and in Texas and see what's going down there. One of the things I've been looking at, we've had this conversation over the last, like 6 months is, people kept saying, well, there's going to be a new normal. We're not going back to the old prices that we were at ever again. And I mean, I always question when people say, things like never and always and everyone. Those are all flags for me that like kind of discount what's being said afterwards.
Or trust me on this price.
Yeah, I mean, you know what? I don't question that. I mean, it depends on who the person is. But I was looking, it was really from 2000 and the third quarter of 2018, all the way until the end of 2000, and I guess I'd say probably the end of 2019. So like a year plus. The market traded basically between $300 and $400. So we're obviously sitting just above the high end of that number right now. And if you look at from a technical standpoint, the market broke the lows of earlier this year. They broke the lows of 2020. So the question is where is it going to go? And I think that's a question that everybody's going to ask, and people, at least that have reached out to me. And my question is not so much where's it going to go, Ash, but what's it going to do once it gets there?
That's a good point.
We had 2 years of astronomical, unbelievable, like volatility and prices that nobody ever in their wildest dreams ever thought was attainable. When you think back of the high back in 2018 when the market hit 659, and that was oh my gosh, unbelievable. And to think of like where we went, my question is are we going to go into a prolonged period where the market just kind of lays plus or minus cost of production, and we rationalize supply just at the producer end, just like we rationalize supply at the consuming end over the last 2 years? And what does that level look like? So,
yeah. So what? Let's go shorter term on that. 2 or 3 weeks ago, a little bit of buying never turned into what we thought it was going to. What are you seeing in the market you trade in the East right now relative to? Because the easy thing people know how to talk about is relative to print. What are items trading relative to print right now in the Eastern spruce market?
I would say depending on the item, the market is trading somewhere, $10 to $20 to $50 or more under print. That's probably reasonable. There's probably some guys that are selling some lumber at or near print but
it depends upon who you are in the show. If you think about it, where we came from in this last cycle, in the last 2 or 3 months, let's pick one item: 2x4 9-foot studs. Where was our high end trade in the last 2 months about, and where is the low end trade today? We're down. Are we under 500 yet, Boston?
No. The market's trading in some, in the mid to high 500s. I think I don't forgot to see what print was this morning.
But we almost touched it.
I think print was 595.
But were we almost 1,000 on the last high we had? Did we make it back to 1,000 on those?
It all depends on how far back you want to go, right? It's one of the things that's happened, Ash, is, as you said, is since the market sold off in the first half of the year, in the last 3 months we've had I'm going to say 3 like short covering rallies slash bull phases in a bear market. So, and each successive time, the range has been smaller that the market's moved up.
Right.
But one of my points is, and this is as I look at the market overall, Eastern spruce is still relatively high priced compared to Western spruce. Okay, on a lot of items that historically have maybe traded a bit more of a discount.
Look, it's interesting you say that, because one of the things a lot of people have been pointing out and talking about was how that new contract, I don't have it open, maybe the new contract was trading at a big premium to the old contract. When you think about it, if they deliver Eastern spruce trucks on those versus Western spruce cars, wouldn't it be a higher price? Or am I off on that?
Well, it's carload delivered, and it's carload delivered, and it ultimately should trade at the lowest common denominator. I just think it's a liquidity. I just think it's more of a liquidity issue than anything.
Okay.
Until we get into the first quarter of next year, and we begin to have to think about transitioning from the old contract to the new contract. I don't really pay much attention to it.
Are you trading old contract or new contract still?
I'm only trading the old contract until once we get in the first quarter, then I'll look seriously at it. I mean, I know there's people say, oh, there's arbitrage opportunities and whatnot. I mean, I'm a simple guy. I'm already confused enough with what I try to do. I don't need more confusion.
Yeah, no, somebody was explaining it to me the other day, and I'm like, I don't really know why it was. I was kind of grasping at straws there, trying to figure out why it was a premium, and more buyers than sellers.
I don't even know what kind of volume we get in that, as a matter of fact.
I mean, it's nothing. I don't trade it, so I don't know. I was just more curious talking to you, somebody that does, to see what.
Yeah, I should. I should probably pay more attention to it.
I know Mike and Greg talked about it on their show yesterday. I believe they did. So I'll have to go back and watch that one and see what they chatted about on it. But yeah, so that kind of covers what I wanted to do today. What you heading back over to the office in a bit?
I will be. I'll be headed back to the salt mine. Gonna break some rocks. Yep.
So we have one thing I did notice on the platform, and we had a lot of bids, a lot of offers, bids to buy, offers to sell. In the last 3 weeks, we have over 300 trucks up almost every day now. Trucks and cars of Southern Pine, Hem Fir, Doug Fir, OSB, Eastern Western Spruce, all the regions of the pine to sell. So what we've noticed is more sellers calling us now saying, hey,
right,
we've been watching you guys for a couple of years now. We really think it's a good time to start utilizing your service, right? Your digital platform. And that's great. It's awesome. But for people watching this, you could tell the liquidity, people are looking for more outlets. So there's less call. Like I put in my summary, I sent out to all the users today. If you are a traditional seller sitting at a desk, if you're a veteran, this doesn't surprise you. If you're new, you're probably going to have to make more outgoing phone calls depending upon your customer base, or use materials exchange, obviously, than you did have incoming phone calls and just taking orders over the last 2 years.
Yeah. I mean, listen, the last 2 years were unprecedented for guys that have been in this business for a while. And the next 2 years are going to look a lot more like the way the business has historically worked. I guess, my as I look out, looking for my, my black swan is what, the two things is, there were the better part of 10 years, zero interest rates. So, as interest rates continue to increase and filter through, and how that affects businesses that have, operated in essentially a zero interest rate environment over the better part of the last 10 years, what happens with that? And with what's happened in both the speed and the increase in interest rates, and what that's doing in currencies, what's going to break? Maybe because before this is all over, something is going to break. And I don't, the plus side is it's probably not housing. Housing is going to adjust and probably going to hold up relatively well because of a number of factors. Because it's always something different, right? I mean, last time it was housing was the thing that brought everything down. What's the next one going to be? And so I'm in the seek to understand so I can be understood mode on that.
automobile.
We need to get Brian Westbury on here to give us some insight.
Yeah, it's crazy because maybe it'll be cryptocurrency when everybody, who knows?
Wait a minute. Let me check my Ethereum account at Coinbase. Hang on.
No, hold on.
Coinbase still in business?
I got to flip my mining computers on in the background here, and then stake stuff into the ground because there's a lot of these crypto people have made up a whole new lingo on what they talk about, and you're just supposed to buy it because it's going to be worth a lot more.
Yep. So when you have big changes like we've had here, there are a number of unintended consequences on things that happen. And so that's what we want to be on the lookout for. I mean, I feel like this week in lumber, we always want to be looking out, like the over the horizon, see what our over the horizon capabilities are. Right?
For sure. Yeah, no doubt about that. We should get Brian. We should get,
oh my gosh.
We should get a couple of our other people back on so we can get
my Ethereum's up from what I paid for it, but it's like half of what it was the last time I looked. So, oh well.
Yeah, no doubt. Well, look, thanks for stopping by. I'm sure I'll talk to you before the day is over, Greg. Tomorrow it'll be Matt Lehman and I for lunch with Lumberman at 12 o'clock Central. We'll get that pushed out to you. And
I see he's working on like some real time price collecting information. I'll have to tune in to see how that's working out.
It's pretty cool. He has people in the field that are sending him real time pricing. And look at why not have another alternative to look at prices? Heck, it would be great to have a bunch of them. Like I said, but Matt's a big friend of Materials Exchange and a supporter, and obviously we're coming up with a lot of real-time data, right? So eventually all that data will probably be digital and not have to be calling 100 people to ask them what they bought and sold at, right?
Yeah, well, I still think there's always going to be an advantage to have some human element, but the more easily.
Come on, Greg, you got to cross that chasm, baby. You got to cross that chasm.
I don't know. I don't know. I'm an old dog, and so I could probably bide my time. But I do think that anything where we can get more hard data is definitely better. Because there's some real challenges when you look at the price reporting that the industry uses in terms of its reliability to accurately reflect week to week. It's great over the long term for trending and whatnot, but on a week to week basis, there's some real glaring there's some real glaring issues. Gotcha. I'll just say that. I think that's harmless enough, isn't it? Politically correct.
Well, I just stay out of the politics. That way, I never have to think about that way you stay on good terms with your wife. Exactly. All right. Well, cool.
All right. Take care, guys. Good to talk to you.
All right, buddy. Bye.
Cheers. Yep. Bye.